Yeah, the big four Chinese banks are Bank of China, the most well-known foreign banks, also in the foreign countries. But there's also the Agriculture Bank of China, Bank of Communications, and Construction Bank of China. For the success, I would say the regulator or the economic environment in China very much protected the Chinese bank in the past. For example, the interest rate was controlled by the Chinese Central Bank, PBOC, People's Bank of China. So they had a huge spread between the deposit and loan rate, which gives them high revenues and high profit. Also, the market share, although declining in recent years, are very large of the big four banks, around 40, 50, 60%. So there's a lot of business in China. Most of the economy, especially the companies, are financed via credit. So to make profits with banking, especially as a big bank, was not really difficult in the past, actually. I think there is a domestic reason for these reforms and a foreign reason. The foreign reason is clear. This is the internationalization of the Chinese currency, the renminbi. To have a leading international currency, you need to have a proper and mature financial system. Without that, everything is nothing. If, for example, if you see the US dollar, they have a very deep and liquid capital market and a proper bank. And this is not the way, so far at least, how China works. So if they want to develop the renminbi as an international currency, they have to reform and liberalize the internal domestic financial system. That's the first reason. The second reason is a financial system in principle is about capital allocation. And for proper capital allocation, you need a proper financial system. For example, now most of the Chinese banks, especially the big four Chinese banks, are state-owned banks. And the state-owned banks have a natural tendency for their credit behavior to give more credits or preferred credits to big companies or to other state-owned companies. Not for political reason, of course, but for simply business reason, because if you have a big company, you have this big asset, big collaterals, and if you are a state-owned company, give you credit to a state-owned company, actually you have no risk, because the risk is with the state and backed by the state. And so also we do need in China a kind of a change of the ownership to more private business. But this is only one thing. For example, the other thing is just liberalize the interest rate. I talked this before already, which is also necessary to have more competition. So China does actually need more competition in the financial sector. Yeah, this is actually a mystery somewhat when I start my research about that everybody, if you read an article, scientific or a newspaper article, there's all the talk about the inefficiency of Chinese banks. On the other side, if you see, for example, the ranking in the banker in the last 10 years, in the top 10, there are always Chinese banks with the highest profitability. A possible solution which is intended in our research is that this lower efficiency compared to Western peers. That means lower productivity of the staff, basically. Yeah, this means efficiency in this regards. By the way, it's not very easy to measure efficiency in a service sector industry because you have no real output. Anyway, you can measure it in all terms. They have more staff in Chinese bank, to put it in simple word, to produce the same output, for example, in credit volume as international banks. However, this is compensated or even overcompensated by low staff salary compared to Western banks. You have to see, everybody knows China, they have 1.3 or 1.4 billion people. They have millions of graduates every year, 20, 30 millions of graduates, a lot of business students. And a lot of them won't go for the finance industry for a simple reason, because at first it is fashionable to go for the finance industry for young people all the time, all part of the world. And secondly, they have from the level of salary a higher salary, although this level is much lower than in a Western bank. And this is one reason why they can overcompensate this lower efficiency compared to Western bank, together with what I already mentioned before, this large interest rate spread between the deposit and the lending rate. We have to say from the big picture, the Chinese banks, the business model of Chinese banks is much more narrow. Even for the big four, but for city commercial banks, we have not only big four, we have city commercial bank, corporate banks, joint stock banks, all this kind of stuff. In any case, the business model is much more narrow. It's basically commercial banking, deposit and loan business. In recent years, we saw development in mutual fund business, asset management, which is already somewhat for some of the big banks, for example, Bank of China, a bigger business. 20% of the revenues, more or less, of Bank of China is from this fee income. So the Chinese bank try to generate more fee income, but still they are very narrow in their business model, deposit and loan. Now they have mutual funds, no capital market business, no investment banking business, no IPOs, no underwriting. Or very narrow, no is probably too strong, very narrow. So they have to broaden their business model. However, having said that, as we know from our Western experience and from our different crises, as late as from the big global crisis in 2007, 2008, investment banking has a risk, especially if banks trade on own account, which is a special risk here. So China has to take care, or Chinese bank has to take care to, on the one side, to open the business model, on the other side, to control the risk in the system. I see somewhat a convergence of the business model of banks. I think the business model of Western banks getting more and more narrow. I think we will see kind of a separation, which we already have for a long, long time, especially in the United States, not so much in Europe. We will see more specialized bank. For different reasons, for cost reasons, for profit reasons, for risk reasons. We have strong capital requirements. So we will see a more narrow business model in Western banks and a more broader business model in Chinese banks. I think here this will give us a kind of a convergence in the overall banking sector. And of course, Chinese banks are going abroad. Here, for example, in Germany, or especially in Frankfurt, of course, we have all Chinese or all big Chinese banks. They have branches here. They make their business here, though they develop this. So we will see more internationalization of Chinese banks. However, having said that, we should not think in 1-2 years context here, or a time periods when we thought about a reformation, thinking about a the development of Chinese banking sector and financial system. This is probably we need decades to think of. Basically, shadow banking globally is defined simply all banking business which is not supervised and regulated by the regulator and the supervisory authorities. So if we have, for example, we too have a private credit in money, this is also part of shadow banking. The situation here is a little bit tricky. The term shadow banking in the West is very much very much negative touch because of the financial crisis and because of other things. In China, from my point of view, the situation is different. Shadow banking, at least to a large part, is also market economy business, more private business. Yeah, you have this kind of trust funds, for example. The company, they not or have difficulties to get a loan from a bank for different reasons. They go directly to the market and issue a certificate, whatever. This is also shadow banking. But this means actually private business, private funding. There is a lack of funding for special companies, and this is somewhat overcome by shadow banking. So insofar, I think shadow banking, of course, there's also a lot of risk. In important parts, it's part of this liberalization and more market-driven financial system in China. I think 2 areas of special interest. First is, what does the internationalization of Chinese renminbi mean for the business of Chinese banks? You have to see, you need other risk management. You need, for example, to integrate swap business, future business, interest rate swaps, exchange rate swaps, which is at, let's say, a new level. For that, of course, you need also qualified people who are familiar with the Chinese environment and with the Chinese language. So you cannot only buy foreigners and make the business. You need also the local people. This is the first challenge, and this is the first interesting area of research. And the second interest area is, of course, how the Chinese banks manage the challenge of liberalization. you have to see from a macroeconomic perspective, the liberalization of the interest rate is very nice. From a company's perspective, like a bank, it's not nice because it means you have less revenues, less profits and this stuff. So they need to look for new business areas, for example, mutual funds or anything else. So this is another challenge, how they can survive, perform, stay competitive in this new liberalized environment in China.